Okay. Oh, let's have a look. This is July 2nd. It's a Thursday, 1:16. So the markets are still open. It's a Thursday today, not a Friday. The reason for that is that the market is closed tomorrow for July 4th holiday. So anything that we do this week, well, we're going to do today because it's Thursday. Let's have a look at what Bitcoin is doing so that we can decide what we're going to do with MSTR. Now, I already know what I'm going to do with it, but I'm just going to, kind of talk through it. So, I am of the opinion that Bitcoin is bottomed or is bottoming. We're rounding out here, and we're going to head back up. But I do not know if it, like, say it wants to come back down and retest 58,000, or if it wants to just go straight to the moon and go parabolic out of this Thursday move, wake up Monday morning, and just completely disappear into, blue sky territories up here. And so I don't want to be excessively aggressive. I want to be, like, aggressively defensive. Which is generally how I approach everything, because I always buy things down in the gutter. I always buy things that are severely beat up, and I don't exactly know when the beat up is going to stop, but I want to be able to approach it in a safe way, so that I'm never really on the downside of anything. If we were to look at the MACD, it's crossing here, but it had crossed previously and then kind of dropped down. And so it's crossing here. It should, in theory, become bullish and start climbing up and try to find, some kind of, at least like a run like this, where did we travel from? 60,000 to 80, call it 83,000. We should at least see some kind of bullish move upwards, and with these coming together to kind of signify a when, which is actually coming together today. I can just delete these and, look at it closer. So these are coming together to kind of signal a when, and that's going to at least want to take us to about 70,000, which I believe was the mark from early June on the initial drop down, which is going to be about here. So yeah, we'll call it about 70,000 is going to be the first look that we want to be planning around. We do have the green on the MACD here, and it's starting to collect some buyers, whereas here, when it finally did cross over, we started collecting some buyers, and it didn't make that push up. We kind of want to see the same thing here on the RSI, the relative strength. If we, try to just say that we've seen this before and we've seen this before, and so what should we conclude will happen afterwards? We should conclude that it's going to gain some strength and climb back up to at least 70. So, any buyers here at whatever that price was, 61,000 back in June 5th, should at least see some profit out of this. So everything, in my opinion, says that Bitcoin is bottoming, but I still always want to make my entries advantageous for me, and always on like a defensive side until it proves otherwise. So, Bitcoin looks good to me. It's got these candles here on the weekly. I think it finally posted something green, so that's a bonus. On the weekly, it's also, going to want to turn around and start climbing upwards. And the when on the weekly is coming, say, July 6th or so. Or it already set it here. And then when it finally comes out of it, we should be up in this range from, what is that, 80... Call it like 85,000 up to 97,000 is the range on the weekly chart that it wants to try and climb up to, just to collectively clean up some of that inventory. So if it does want to do some kind of turnaround, it's going to be happening soon, in my opinion, and it wants to get up to at least 80,000 to 95,000 ish. And then, for all I know, it might turn around. It might it might find this rejection here off of some kind of resistance in the, what would that be, $100,000 range. Try to find, some breakthrough on that resistance of this consolidation coming up here, basically this red line. And it may struggle to break through that and fully flip bullish, which is where I believe fully flipping bullish would happen. We have these smaller markers here at like 72,000 and then this 85,000, where if it breaks through 72, that doesn't necessarily mean that it has to break through 85. It could just be saying that this is extraordinarily oversold. We're still going to maintain an upwards trajectory, but that we like this channel more than being way oversold down here, but we're not quite ready to break through and go up into the 100,000 range. So there are some thresholds to get through along the way that I want to be defensively positioned until it proves otherwise. And so that first position that I want to be defensive around is that $70,000 mark. On MSTR, that same mark exists around $5 on MSTU. On MSTU, that same mark exists around $5, but we had to translate it from the MSTR, where it's basically going to be straight through here. And today that's like 144,000. Just to recapture that upwards trend in this channel, it's going to be about 144,000, and then try to get through like 196, which would be basically just $200 MSTR. And then if it does decide to go through there, then we're looking at upwards of 300-400 just to reclaim the bullish trajectory. That there's a lot of stepping stones to come. There's a lot of thresholds to get through, and so I want to be defensively positioned in an advantageous way, so that if it does then turn around, reject off of it, and drop down, I'm not just holding the bag. So what I want to do is come to a smaller time frame and come to MSTU, and then I've already labeled my near-term defensive positions that I want to operate within, and that's where I want to be buying under $3, and then I want to sell calls over $5. That way, if it does reject down, I still collect that premium, and if it passes through the $5, then I can roll that call out and just push it out to the next week and the next week and collect the premiums down the road while still taking advantage of the upwards moves. So basically, I want to reap all of the rewards, and I want to have none of the risk. I want to hold no risk while maintaining a defensive advantage that just gives me all of the rewards for participating. So with that in mind, MSTU is above $2, and I want to be buying under $3, and then I want to eventually sell calls over $5. So if I then pull up my this Robinhood from last week, we had sold a $2 put. What this meant was that if MSTU stayed under $2, I would be required to buy 100 shares for $2. And then I had sold this for 50 cents, which gave me an average price of about $1.50. So if I did have to buy 100 shares, I would be in at $1.50. But now, today being Friday, where I sold it last week, today being Friday, today is execution day. It's the day that this would either be executed or expire worthless. And what I'm going to do is, one, I'm going to roll it. But if we were under $2, but I am still not quite comfortable with the positioning of what I see in Bitcoin or in MSTR, I want it to prove to me that it's now time to buy, that I have all of the time in the world to roll this out. So if this was under $2, I would just roll it until next week, and then I would roll it again and roll it again and roll it again until I felt like it was an advantageous position to allow it to execute, because I don't actually have to let this happen to me. I don't have to make it I don't have to allow it to make me buy 100 shares. I can just roll it out and move that to next Friday, next Friday, next Friday. So now this is effectively worthless. I had sold it for 50 cents. It's now today worth 1 cent or 2 cents, depending on the bid and the ask. So they're asking 1 cent, and there's nobody picking this up because it's highly improbable to actually find value. It's not going to drop to at least $1.98 in order for this 2 cents or 1 cent to make it worthwhile. So there's no value here. This is expired worthless, and I have made 50 cents times 100. I made $50. This is now worth nothing. It's effectively worthless. So I can roll this out, or I can allow it to expire worthless. Typically, I would let it expire worthless because I could just do that, but that happens after hours, and I want to be able to do this on the video so that there's like a history of exactly what I'm doing. So, first we'll look here and we'll see 468. I had already sent the $200, where I sent $200 last week, and this week I sent another $200, and I'm going to send another $200 next Friday. And so, as you can see, my $200 has already been added, and that's that. So now we have $400 to work with, plus the $50 that I had sold this for. That we have $450 or $468.95. And so we have that much to work with. And what I want to do is I want to maintain the idea that I am willing to buy under $3, and I want to sell calls over $5. So what I want to do here is I want to roll this, and I actually want to roll it to a $4 call. So if I roll this position, and then I roll it to July 10th, which is next Friday, and then I select this $4 call, it's currently going for $1.88, which makes it a break-even price of $2.12. The current price right now is $2.14. So, in theory, if I roll this to $4, then next Friday, if MSTU has not gotten above $4, I would have to buy 100 shares at $4, and that would be my entry point. But then because I collect $1.88, my actual average cost is $2.12. And so I'm still happy with this price right here, the $2.12, that's the one that I'm going to roll it to, and that this $2.12 is still under the $3 mark. So if, say, next week, Bitcoin does continue its momentum and continue its upwards trajectory, then if we get above $3, we start climbing into this no man's land. I can allow this to execute because I sold it for $1.88. It's a technical purchase price of $2.12, and if we're over $3, then I'm already up a full dollar when I do allow this to execute. I buy 100 shares for $4. It's actually $2.12, but the share price is above $3, and I am firmly green and comfortable. And so that would be the plan and the theory for next week, is that I'm going to roll this to a $4 call. Because I have $450 now, I can do that. I could also do the $450 call, and the difference between this one and this one is a larger area to work within. I have more operating space. Whereas like here, last week when I sold the $2 call, I had no operating space. I had something between $2 and $1.50. A 50-cent range to work within isn't a lot of range. Whereas if I sell it up at $4 or $4.50, then I have a huge area to allow Bitcoin to move within, to get a feel for how it wants to behave. And if it does want to continue that bullish momentum upwards, and not do some kind of fake out or reject off of resistance and drop down, then I can allow it to execute. And so I want that extra buffer zone. And then if it does drop down, if it rejects Monday morning, we wake up and this is at $1.39, then this will move from $4 and $1.88 that I sold it for. $1.39 would be like $2.50, $2.61. And so then I can roll it again. I can just roll this to the next Friday, and instead of $1.88, I'll roll it to $1.61. And now my entry price, my break-even price would be $1.39. If that happened, I would be getting a much better entry than I currently am. So I get to see the entire play. I get to see everything and how it's going to work without actually having to commit until I want to commit. So, you know, that's how I'm going to proceed with this. Is that I'm going to roll this to the $4 call, and then just see what happens next week. See what my next move is. Oh. So let me switch this to a margin account. Let me just see what that entails. Agree. Doesn't do that. What is... Let me see how to do this. Okay, it looks like it would take a full day to switch that over. So, yeah, let me make that big. What we're actually going to do is do it the long way. We're going to buy this back, because effectively what rolling is that you just buy this back and you sell the next one. So we're going to do it the long way, where roll this position is just a single click. It does it for you in a single click. What we're going to do is buy to close, and we're going to buy one of them, and then we're going to buy it for 1 cent. Or we could just let it execute or expire worthless, and it would do it all on its own. But what we're going to do is do this the long way. And so I'm going to buy to close. So I'm buying this back, what I had sold. And then I say done. And let's see if that is... Okay, so that's closed now. And then on MSTU, I go back here, and I'm going to sell an option. And so I trade... Yeah, trade MSTU option. And now I can do this sell call for next Friday at $4. There's no bid. We just looked at this. Like, we just looked at this. Why are there no bids? Let me start over. It's MSTU. Trade options. Oh, sell a put. Sell a put at $4. And so we want this one. And we say yes. And then we sell one. And we sell it for $1.80. What is the current price? Let me just check on that real quick. Current price is $2.17. $4 would be $1.50 down to $2.50. Another 20 cents would be $1.70. So it's like $1.73. Is that right? $1.83, I think. $1.83. And let's review and submit. Done. Okay. It didn't go through. So I think I can scroll down to the bottom somewhere here. Did it execute or did it not execute? I have no idea. Okay, it says I have a position, so I should have one. I don't know why it doesn't show on this screen. There's nothing in there. I don't know why it doesn't show on the other screen, but I'm fairly certain I have one of these. I'm fairly certain it executed. So then, now we are in this week for a $4 put, which gives us a larger area to work within. If MSTU drops, and this drops from the $1.83 I think I sold it for. Should be able to see. Yeah, so it sold for $1.83. My break even right now is $2.17, and if MSTU drops down, and it drops down like below $2 or below $1.50, this will increase in price, and then I can just roll it. So I'll roll it out, and I will get a better break even when I do allow this to execute. So that's how that will work. And if we get up above $3, then I can let this execute, buy my 100 shares, and have an average cost of $2.17. So that's that. Now, next week, it's very likely that I actually won't allow this to execute. If we get above $3 and we get to say $3.99 and that thing is worth a penny. It's like the best case scenario for letting it execute is that this is worth a penny. I have made the entire $1.83 and my entry position would be $2.17. I likely still will not let it execute because I don't want to be stuck here in no man's land. What I'll actually do is I'll still just roll it out again, and I will roll it out to about $5. If I can get a good price on $5 or a good price, excuse me, if I can get a good price on $5 or a good price on $6 put, that's still below $3, so that my entry price is my entry break even cost is still below $3. That's what I'll do. So if I look at it next week and we are at $3.99 and a $5 put for the next Friday is going for at least $2, then that gives me an entry that is still below $3 because I will break even at like $2.99. That's where I want to be. I want to conclude the rolling of puts somewhere not in this no man's land. I want it to have already moved through here. That way, as soon as I execute, I can immediately go into selling calls. I don't have like a purgatory week where I'm sitting just waiting to hope that Bitcoin continues to go up. I don't want to be caught in one of these resistances, and I don't want to be caught somewhere in the middle that I'm already good up to $4. And if next week we get through $4 or $4.50 or $5, I can sell the $5 put. Maybe it'll be worth at least $2, and that still gets me an entry below $3 when I finally do actually let it execute. So in the best case scenario, I have one more week where we continue to push upwards and I can sell a $5 put, and that'll be the final put that I will sell. It'll be the final price range that I'm trying to operate puts under, so long as it gives me an entry price under $3, because that's just personally where I want to be at. I want an entry under $3. So that'll be the plan for next Friday, depending on how it moves. Now, if it hits some kind of resistance and rolls over, or goes back into like a big drop off, then I don't have to buy them. I don't have to do anything. I can just roll it out and get a better price down here. But I still want to play defensively, that if I can get a good price on a $5 put and then allow that to be my entry price, where I sell a $5 put, but my actual average entry is below $3, I'll be happy, because then we are up here, it executes, and I can immediately start selling calls and lowering my cost basis. Or if then I could sell like a $5.50 or a $6 call, I'd have to figure that out when that time comes. But if I can sell a $5.50 or a $6 call, and I can sell that for 50 cents or I can sell it for $1, then I can lower my cost basis dramatically. If I can get an entry for, say, $2, but then I can sell a call later for 50 cents, then now my cost basis isn't $2, it's $1.50. And then if I can sell another call that next Friday for 50 cents, then now my cost basis isn't $1.50, it's $1. And then 50 cents and then 0, and now I'm essentially owning this for free. It doesn't owe me anything, and I have technically had to put nothing in because I've lowered my cost basis to 0, even if my entry is $2 or $3 or $1.50. So that's how we'll play it out, and that's how we will navigate our way through purchasing these MSTR and MSTU shares, is that week by week we'll just navigate it defensively while still staying aggressive at trying to maximize our entry points and what we're able to do with those entry points. So, that's basically it. That's the video. I have a $4 put. Oh, how do we get back into here? I have a $4 put now for MSTU and a break-even price currently of $2.17. So yeah, that's it. That's the video.